everyone, it's Michael here from Storehouse Analytics. Welcome to the Storehouse. It's the 11th of April 2016 and this is your ChartWatch presentation where we look at a few charts that I'm watching for the trading week ahead. I wanted to quickly look at those charts with you as we all prepare for the trading week. Okay. That's the risk disclaimer. As always, remember that trading is risky. Please don't trade with money you can't afford to lose, and pause the video at any point and read the disclaimer. Okay, let's quickly go into the charts. I wanted to look at a couple of charts with you today. These charts are the ones that I'm watching for the week ahead. To start off, I wanted to quickly discuss this chart, the British pound, Japanese yen. I hope you can all see my annotations. Now, I brought this chart to your attention just to discuss the point about trends and how we look at trends using this method. So as you can see on the chart, the trend is clearly down. It's been down pretty much since, where are we, 2015, and it's continuing to go down. Now, naturally, everyone and their mother wants to be selling the British pound against the Japanese yen. But my question to you all is, if you want to sell, is now the time to be selling this market? What I've done is highlighted for you demand zones, and look at where price is currently at. This is the candle for the month of April. It is right smack bang inside a demand zone. I'm not saying we don't want to sell this market. We definitely do want to sell this market, just not at the price levels where we're at right now. We want to be looking for price to come higher for us to get a selling opportunity in this market. Right now is not the time to be initiating long positions. If you're short from higher up and you've carried this down, it's been a great ride. It's time to start looking to exit those positions. That's just my opinion. I'm not saying you should close out your trades. I'm only expressing my opinions on this, that price is getting into levels where we will expect and be actively looking for significant movements in price. So as I've said, the obvious decision is, oh yes, we want to sell. That's pretty obvious. Like Sun Tzu said, to be able to hear thunder is not an indication of keen hearing. Everybody can see this downtrend. But the question is, where would you join this trend? I'm saying I won't be interested in this trend to sell it in any of these areas. You will probably have, the probabilities are that you will have a lot of counter trend trades beginning to kick in, which will leave the shorts very, very worried when price starts to turn. Okay, so that's the British pound, Japanese yen. So if we look at it maybe a little bit closer, you'll see on the weekly chart, again, clearly the trend is very much down. But again, regardless of how, look at it. If you're going to be selling this market now, you're selling after all this rally, all this decline in price rather. It's not very smart. Price has already moved a lot already as it is. So to start looking to initiate short positions down here on a daily or a 4-hour chart, it's lower probability, very much so. Okay, and then looking at the daily chart, again we have the same scenario. So here would be the first zone that people might want to look at taking long positions again, or maybe even here. There's a small zone here as well, which was responsible for breaking the lows to the left here. obviously there isn't enough of a profit margin here yet, but also if price comes here, if price starts to break these levels, and we start to get above these highs, it's going to be interesting times for the shorts. Because imagine if you were short all the way from here, or maybe you managed to get into this short here, or even this short here, and then you start to see price come up. People are going to be worried, and then you get what people term a short squeeze. So this is a market we're watching to see if there will be any trades actually to the upside, to look for buys in it. I'm watching it. That trade is probably many days away from now. It's not something that's even come close to setting up yet, but we're watching it, and we'll see what happens this trading week. Okay, that was just a quick bonus. The main chart that I wanted to look at with you all, and sort of go through my thinking process with you, starting from scratch, is the New Zealand Japanese yen. As always, we start with the monthly chart, and we define our fresh zones. So if we look above current price, what are we looking for above current price? Supply. That is the fresh supply zone. We look below current price and left, and that is the fresh demand zone. Now, price is in between these zones, so that our decision matrix automatically tells us then that we should be trading the trend. So if we go down to the trend time frame, which for us is the weekly chart, you'll see that the trend here continues also to be down, and we're creating, it's a big zone, we're creating zones as we continue to go down. I would rather this low is totally taken out by this move. If this were to come back here, you know, this week for example, or even next week, without making lower lows here, then we wouldn't be taking set and forget trades in here. I'd be watching this to see if there was the beginnings of a change in the upside momentum that will be seen on the daily and 4-hour charts before trying to join it to take it further back down. So that's the trend chart down, a zone that we will have to be watching just to see what happens when price gets in there. Okay, and then going to the daily chart, you see the opportunities to sell. This is what I'm looking at really. So this is a little bit of an aggressive zone. So I'm not saying sell here, I'm just saying this is what I am watching. It's a little bit of an aggressive zone because at the moment anyway, I don't have enough of a profit margin. So if price were to rally up straight here now, my first profit target would be somewhere down here. So that probably won't even give me a 2-to-1, depending on where the dark charts help me set my stop loss at. So I'm looking for a further downside move in this market, so that I can have a bigger profit margin. So this is a chart that I am watching and looking to maybe participate in if we get a bigger move to the downside. So that's the quick video on ChartWatch. Before we finish, also I wanted to point out this chart to you all just as an explanation. It's because of some questions I had over the weekend about supply and demand and the laws, the economic laws of supply and demand. I think we're all taught this in economics, and we think we get it, we think we understand it, until it's time to actually trade it on the charts, and then we sort of muddle it up. At least I did anyway, until I eventually understood it. So just quickly running through it. Here, price is falling. what do we think is happening to demand and to supply? The usual thinking is that, oh, there's a lot of supply coming into the market and price is falling. But actually, as price falls, demand is increasing. Think about it. The cheaper something gets, don't you usually want to buy more? If you wanted to buy a house and you found out that house prices were falling like they were doing in 07, 08, 09, excuse me, wouldn't you want to buy more? And the people who had the funds at the time did buy more. They bought a ton of properties because price was getting cheaper. And they took the opportunity and entered the market. So as price falls, demand increases and the supply decreases. People who could afford to hold on to their houses were holding on, saying, I bought it at 200,000 or 300,000, now it's worth 150. I'm not pressed to sell right now. I'll wait and see what happens. So then price falls to an extent that the amount of demand becomes enough to overcome the supply, and a rally in price happens right there. So that's how it is. Again, as price rises, the supply in the market increases, so that house owner is thinking, right, okay, I'm glad I didn't sell when my house was worth this amount or this amount or especially this amount. Oh, well, now it's worth about here again, and it really fell, so it's actually risen. And what you'll notice is actually this price level around here is pretty much around the same area, but because of the way the human mind works, that house owner is not thinking, I didn't want to sell it when it was around here, why would I want to sell it when it gets back to around the same price level? He's thinking, in the last 1, 2, 3, 4 months it's risen. I don't know if it's going to go higher. I might as well sell. That's the trick. So it's the human mind that plays those tricks. And then as price falls, supply decreases and demand increases again until a price level is reached that the amount of demand becomes enough to overcome the supply, and then you get a rally. Now, what happens to demand as prices are increasing? The usual conventional thinking is that there's a lot of buyers coming into the market and people are buying it. That's not necessarily true. The thing is, if you follow the law of demand and supply, as price rises, demand is actually increasing. The more expensive something gets, the less people you'll see who will want to buy it. So demand is actually is decreasing rather as price is rising, and the supply, whoever is making this thing or building houses, for example, or making this widget, is seeing this rally in price and thinking, wow, let me build as many houses as I can because the market is going up, I can sell it at a huge profit. Or let me make as many widgets as I can and sell it at really high prices up here. So the suppliers are increasing their production, but gradually as it becomes more and more expensive, the consumers are saying, prices are too high, I'll wait for it to come down and all of this. So I just wanted to show you this chart. I have this chart locked nicely away somewhere, and I remind myself of it from time to time. It's obviously ingrained in my head now, but it's still worth looking at from time to time. Okay, so that's Michael, Storehouse Analytics, ChartWatch for the week beginning the 11th of April 2016. Thank you all for watching. Thank you to everyone who subscribed to the channel. Thank you for helping me with the comments and with the feedback that you've all given. Thank you for sharing the videos, for giving them a thumbs up. Thank you very much. Your feedback is making us better and giving us the oomph, if you like, to do more. So those are my contact details. If anybody wanted to contact me or follow me, I really encourage new young traders who are coming into this to buckle down and study the methodology. And you'll get this. Even for older traders who things may be tough right now. If you wanted to take this further with any mentoring, we can talk about your goals and what you want to achieve, and see if there's anything we can do to help. It's inexpensive. I'm not looking to start a trading school or something right now, so don't worry about it. I got taught this at a very expensive price, so I'm not going to be charging you an arm and a leg, if you like. So okay, that's me done. Enough talking. Have a great trading week, and remember, people, they're protective stop losses. Use them.